Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Institutional capital is quietly migrating to regulated blockchain infrastructure. Tradable has moved $1 billion in private credit assets from ZKSWNC to Stellar. This strategic shift signals a growing preference for chains that prioritize compliance and stability over pure decentralization narratives. The move underscores a maturing market where risk management dictates infrastructure choice. Meanwhile, central bank policy faces a sudden geopolitical test. The European Central Bank's July 22 rate decision now hinges on escalating tensions in the Strait of Hormuz. Renewed hostilities have pushed Brent crude above $85 a barrel. This energy shock complicates the ECB's inflation outlook. Policymakers must now weigh the risk of reigniting price pressures against the need to support a fragile economy. The hold may no longer be the default option. On the macro front, India's capital markets are preparing for a massive structural shift. Credit rating agency CRISIL projects that non-sovereign debt will nearly double to 150% of GDP by 2047. This expansion is critical to funding the Viksit Bharat initiative. The surge in corporate borrowing will reshape the country's debt landscape, demanding deeper liquidity and more sophisticated risk pricing from global investors. In related news, settlement infrastructure is undergoing a quiet revolution. The Depository Trust and Clearing Corporation has launched a limited production trial for tokenized equities and treasuries. JPMorgan and BlackRock are participating in this pilot. This marks a significant step toward integrating traditional finance with blockchain technology. The trial aims to streamline settlement processes and reduce counterparty risk. It suggests that major institutions are moving beyond experimentation to practical implementation. However, not all AI-related financial metrics are as robust as they appear. Bernstein analysts have flagged a distortion in Core Scientific's reported performance. The company's 75% return on assets is an outlier driven by $750 million in tenant financing. This figure does not reflect the broader sector's AI colocation economics. Investors should look past the headline number to understand the underlying operational reality. The market is learning to distinguish between financial engineering and genuine operational efficiency. Looking ahead to today's release, the economic calendar remains relatively quiet. There are no major high-impact data points scheduled for the next 36 hours. This lack of catalysts allows markets to digest the geopolitical and structural developments discussed today. Traders are likely to maintain cautious positioning as they await clearer signals on inflation and growth. The convergence of regulatory clarity in crypto, geopolitical risks in energy, and structural shifts in emerging markets and settlement infrastructure defines the current landscape. Investors must navigate these complex interdependencies carefully. The days of simple beta exposure are fading. Alpha now lies in understanding these nuanced structural changes. That's your market briefing. Follow Rumour with AI for daily market intelligence.